Welcome. FOMC, man. Big evening to say the least. Just looking at the markets, I mean, NASDAQ is obviously the sell button. Doesn't really work. I mean, it works a little bit, but it doesn't really do too much other than go up. Bitcoin. What do you want me to say? Come on, what do you want me to say? I mean, let's just say that they're buying it. All right. Bids are being hit, but volume has been a little bit light across the board with Bitcoin, but we're going to be diving into that. So what's the plan? So in the next 20 minutes or so, we're going to get word on the Federal Reserve funds rate, and then we're going to get the projections, and then 30 minutes later, we'll be diving. I just had Jamie Dimon. No, Michelle's come out. JP Morgan. She says that I think it's Michelle. She expects a 25 basis point cut, but quite frankly, we want to know what the Federal Reserve stance is in terms of the future. Are we going to get the rate cuts in more of a dovish sentiment, or is it going to be a hawkish sentiment? That's what we're looking for. We're looking for keywords from Jerome Powell to say, yeah, don't worry, we're going to cut and we're going to keep on cutting. But we're cutting with no idea on where we are with the labor market. We're just going to go with what we know. That's your Federal Reserve, ladies and gentlemen. Like, anyways. NASDAQ trying to recover back from the day's loss, but it's still trading positive, still at yesterday's high, which is a very interesting spot. It's playing that range twice now. But we're going to be diving into a few assets tonight. We're going to be looking at what stocks are up in volume as we head in towards the FOMC. And usually what happens is once we get the federal funds rate, there is a little bit of volatility, but investors already know we're going to get a rate cut. So we don't need to really worry too much about that. What we're looking for is, what is Powell going to say? And the big question that I'm looking for them to ask is, what's his opinion on the fact that Donald Trump wants to have him replaced by next year or the end of the year as the federal board chairman? I mean, that is going to be wild if he turns around and says, I'm not in a position to discuss any. If he starts running that, you know, when he doesn't care, when he actually starts to give his opinion on things. So audio not working. Sound is cracking. Huh? Refresh it. Is sound really bad? Sound shouldn't be bad. No, it shouldn't be bad. What? What on earth is going on here? Hold on. I think I know. How about now? Mic's good. Audio's good for me. Audio. Close the chat and refresh it. Audio is top. Audio is on and off. It's all good. All right. It's picking. Working fine. Yeah, we good. Yeah, it should be fine. Yeah, sounds fine. I'm going with the sound good. All right, cool. Don't do that to me, man. That stresses me out. Everything's working fine, my end. Happy days. It cuts in and out. Hold on. Sound is fine. Thank you, Theo, man. That is awesome. All right, cool. Audio's good. All right, let's get with the program, ladies and gentlemen. Check this out. This trader has bet $21 million on a 30% rise in the S&P by December 2026. Ladies and gentlemen, how much more is this thing going to go? Let's be honest now. How much more can it go? I mean, 30% rise by December 2026. That is wild. Absolutely wild. So let's just assume it's from here. Okay. Audio is bold. Okay. If audio is bold, I'm happy with that. From here, a 30% rise. That's 5%. Yeah. That's 10%. Let's keep going. 16. 21. Ladies and gentlemen, a 30% rise. He's just opened options. Okay, there's your 30%, 8,950. All right, goes on to say that he's opened an options trade that will expire by the end of next year, and he spent 20.9 million on premium calls, wagering on the gauges rally above 9,000 by December 2026. That is absolutely wild. Do you understand what that is? That would effectively put the NASDAQ above, 35,000, maybe 40. Okay. That could easily put Nvidia at $7.5 trillion market cap. I mean, come on, man. At what point does, if we're going to go with that logic, ladies and gentlemen, all right, Bitcoin realistically is the true thing when you think about it, because they buy it when it drops and then they sell it when it rises. What happens in the stock market is they buy it as it rises and they sell it as it rises, but they buy it even more when it's rising. You've got euphoria happening in the marketplace, guys, and that's the crazy thing. Now, of course, earlier on, we're talking about Andrew Sorkin, who's come out with this new book about 1929 crash. I mean, look, we know we're going to get a pullback at some point, but too much money is going into AI. And you're going to get the pessimists that are going to turn around and start saying, oh, no, they're spending too much money. The stocks are overvalued. In my opinion, they can't be overvalued because everyone believes that the value is less, because it wouldn't keep on going up if they believed that it was overvalued. Right now, you've got people thinking, well, all these investments that have been made. You had a post right now from Donald Trump saying that I brought home the billions. He's brought home lots of money to the United States in terms of deals in his career and what have you. All right. So what does that mean? Investors' expectations are that the value is not met yet. It's not overvalued. That's what they're thinking. And that's the thing we got to get into our minds, ladies and gentlemen. So when we get the FOMC tonight, I mean, there is a little thing that we need to talk about, and that is Fed pivot. So when the Fed pivots, usually the market pulls back. But are we going to change history now? Because every pivot that happens, the stock market has been at an all-time high, right? And it usually corrects. Not with what's going on right now. We've not had an AI rally, okay? It's either a gold rush or a sugar rush. And it was a sugar rush in 1929. Everyone was so over-leveraged. Is everyone over-leveraged right now? Clearly don't care. Now, we've got the margin ratio that is screaming consolidation, but the market doesn't care. So that's how it rolls. So we have to roll with that. Let's break down a little bit of price action, understand exactly what's going on across the board. All right, listen. NVIDIA, it's breaking records, okay? Currently at the $5 trillion mark. So let's just bring up some flavor in the stock market first, and I'll get into cryptocurrency. Right now, we are looking at the stocks that are up on volume today, okay? And we've got this Jamf Holdings, okay, which is standard in Apple Enterprise Management and cloud software platform for infrastructure and security, had an influx of volume coming into play. Around 30 million shares have been transacted. It's at now $12.85, and it's been on earnings per share is due in 12 days time. All right. So $30 million, 30 million shares were exchanged today. Okay. Big move to the upside, and the earnings per share is not due for another 12 days. Please, those of you that like to scalp things and take advantage of quick movements, investigate this. Find out why, because this has just come up for me, okay? So it's just one of those that you just want to pay attention to. When you see big volume like that, they're not selling. They are buying this thing up, okay? And you can see it's coming away from its lows around $8, now currently trading at 12. If this is what I think it's going to be, then we're going to see a good earnings per share, because usually insiders are going to be playing this, and it's going to shoot up from that point, okay? So just take an eye out on this one. Next one, we've got CSG Systems. Now, this is provides outsourced billing, customer care, print and mail services for communications industry. Big shoot up. Earnings per share due in 7 days. So what's going on in this company? Shot up now, what 290% in volume? That is wild, okay? Going into the actual fund ownership is good. I mean, you got 65% of the stock is being played by funds, but again, big volume. That's a big breakout right there. And it's backed by volume. Doesn't really trade much in terms of shares per day, but it's 206,000. That's really low. But today it's traded 1,795,000. So something's brewing in this company. All right. These are just little flips that you can just dive into and investigate. Okay. And you can try and take advantage of some flavor. But usually before the earnings per share is due, after a big pump, there are investors that will look to consolidate and take some profits. That could be the opportunity. As long as price retains and sustains that area that it's moved up towards. Okay. Then when we get to the earnings per share, you're effectively taking a gamble on the idea of the EPS coming in better. Okay. So that's something right there. And we've got this bank right here called Bank Mandiri. Okay. Indonesian-based company provides various banking products. That's moved up a little bit, but you know what? Don't even pay attention to that because that's very, very low on volume, even though it has come up about 1 million. But nah, don't pay attention to that. Now we got Olympic Steel coming into play. Big move right there. It distributes processed carbon-coated aluminium, stainless, flat-rolled sheet, coil, plate, and steel products. So when commodities like this, or companies that provide commodities, when they come up, again, they've just had a good earnings per share at 73%. So you can assume that their quarterly earnings are okay. Right, there you go. They've just turned a profit from the last 3 quarters where they've been losing. So that could also be down to tariffs and what have you, but 73% on earnings and 4% on sales. Me personally, very low volume, nothing to get too excited about, but pay attention to it because it is a volatile stock from what I can see. Okay, now going into the main players. All right, we've got some things to dive into just before we get into the good old cryptocurrency story. Nvidia trading at the highs, $5 trillion plus market cap. Happy days. Microsoft pulling back a little bit right there. Going into Amazon, we've got ourselves a little bit of a pullback. I don't like it when I'm seeing the Mag 7 pulling back, but Google is killing it. Google is tearing it apart, all-time highs, probably leading the rally to the upside. Just to quickly back up the idea of Google, because of course tonight we do have Google earnings announcements. So it's going to be an interesting one to see. Now volume is up 17.8 million. So volume is relatively down for the day, but 33 million shares on average per day. That is absolutely awesome. And the earnings per share is due very, very soon, but volume is light. Look, Google is making all-time highs on light volume. If you look on the bottom right here, you can see volume bar is very, very low. So just take that into consideration. It's only trading 50% of its average for a normal day. So you've got to be very careful with that. Hopefully it comes in well, but it's going to be a deciding factor later on. Quickly going into Meta, who is also declaring their earnings tonight. I think it is. Is it tonight? Hold on. Yep, tonight. At the close of the market, they're going to be declaring their earnings, and we can see that they're doing a rise to the upside, but volume is down by 9%. So that's not really good. You don't want to be seeing that. And that's a bit of a cause for concern when you've got participants of the Mag 7. I mean, if I just go and bring you NVIDIA up, okay, that's going to help you understand exactly where we are. If NVIDIA's volume is down, we got a problem. No, NVIDIA's volume is up, but price action is trading very close towards its lows. It's still positive, but trading close towards its lows. 218 million, man. This is just an absolute madness. $5.047 trillion. That is absolutely shocking. And management only hold 4% of the stock. This is getting close to trading around nearly 10,000 fund owners coming into play. That is this is the perfect company. I'm sorry. This is the perfect company. Look at it. It's just flawless. Debt is minimal right there, 11%. This is what I've been saying for quite some time, that tech companies, they're not really bothered about the interest rates. Why? Because they are so cash rich. And that is evident with all the deals that have been coming into play. Now, let's get into a little bit of Bitcoin. What time are we on? We are 5 minutes until the FOMC federal funds rate. So Bitcoin has made a little bit of a pullback to the downside, quickly rolling over into the daily to put into perspective. Bitcoin still trading away from the 50-day, 50 EMA right there, which is this purple line. And it's made a lower high here, but this vector here, I'm looking for this vector with Bitcoin. If we do get some good news, then happy days. Bitcoin should be making a claim to the upside. Going over into this, the open interest has gone up, but I do want to look for the Coinbase Premium Index. Let's have a look. Is it red yet? Surely it should be red. Oh my days. What have we said? What have we said, boys and girls? Whenever this is red, this is where you start considering buying. If you saw this turn red at 114,000, okay, this is where you consider purchases. You would have done okay-ish, but I mean, from this drop to the move to the upside, okay, but when it's red, you buy. That's the principle behind this, because it's showing you that institutional investors are buying on the back of retail investors selling, right? Because this tells you when it's green, you buy, but you do the opposite, okay? Just go and study this chart. You'll understand what I'm talking about. Quickly going into the open interest over here on Bitcoin. So we've got this problem. They've lost this area. This is a problem for me. This open interest has been breached. So that tells me that there's been a few liquidations coming into play. These guys are being challenged. NASDAQ is starting to pull back a little bit. Tino worked for Olympic steel, only scalp. Trust me, this is not a company you want to in long-term investing, not financial advice, just a bro to a bro. There you go. Look at that. Didn't know nothing. I've just given that on the basis of the volume that's coming in. And the gentleman's come in saying that he's worked for Olympic Steel. Well, it's scalp to scalp because it is a very lightly traded asset. So yeah, mad love for that, my bro. I am not looking at XRP. Ah, go on, let's have a look at XRP. You want my honest opinion? It's going to eat this wick and it's going to enjoy it. It's going to sweep that liquidity down there. You think they're not going to allow... Don't be stupid, man. They are not going to allow that thing to not get recovered, ladies and gentlemen. Forget the bald head. I don't care about XRP. Stop winding me up about it. Anyways, so this is where we are with Bitcoin on the daily. Quickly dropping it down to the 4 hour. Given that we know that the open interest here has been breached, I just want to draw your attention to something else as well. So we've got here what is called the liquidation delta, okay? And we've effectively got some shorts all the way up here, okay, which sits at around 112,950, but it's not that much volume, okay? And we've seen that these guys here, we've had a bit of a positive delta in and around the 111,950, which those traders right now are effectively getting hurt with Bitcoin's price to the downside. Okay, now there's bigger players down here, but we're not going to be looking at that just yet because we're nowhere near it. Okay, so that's your liquidation delta. We've got to be very cautious because we're in this empty zone right now where there's short liquidations delta up here around the 112,950. So if there's anything good that comes out regarding the FOMC, which is going to be in a split second, here we go. Let's just get the chart up a sec. Let's just split this up. This is NASDAQ on the 5-minute time frame. Just get that up. And we're going to quickly, I'm going to read out what they're actually saying regarding the federal funds rate. This is Bitcoin on the 4 hour, drop it down to the 15, just to understand where we are with everything. And then what we're going to do is just go over what I'm still continuing to talk about. We'll dive into a few altcoins and I'll take some questions and that should get us really going. Tino, you're really getting into your Halloween spirit looking like a straight pumpkin. Comment of the evening, ladies and gentlemen. This guy. What a guy. Straight pumpkin. Anyways, come on. Give me some flavor. All right. Brent crude oil's gaining on sharp inventory decline. That's no good. But that is good in a sense. Here we go. That means China's doing business. Remember that. When oil rises, you know China's consuming it. What about gold? I'm going to get into gold. Here we go. What is this? What is this? Come on. We've got some movement now. Here we go. Interest rates actual 4%. 4.25. Yep, there's your rate cut. Okay, we got that. Okay. Come on, give me some comments. Give me some comments. There she is. Look at that. Recovery of the vector right there. Look, that should be something. Order book is being a pain in the ass. Horrible, horrible, horrible. This is absolutely wild. Wait there. Let me show you the order book. Look at this. Look at that spread. There's a spread in the depth. That's no good. That is not good at all. That is no good if there is a spread. You don't have any trades open during this time, man. This is a crazy time. All right, what are they saying? Hold on. What are they saying? All right, so nothing out just yet regarding that story. Come on, NASDAQ. Bitcoin's not really doing anything, which is really good, really. I'm happy with Bitcoin doing that. NASDAQ's pulling back a little bit now. There's still a spread in the depth. That is horrible. Well, that's no good. You've got your rate cut, guys. So, yeah, 4% is the new rate now. Now, this is what's going to be really important about it. It's whether or not Powell says that the next cut is going to be something that they are reluctant to do or they're willing to do. Okay, this is what we're looking for. We know we were getting 25 basis points. Market's pricing that logic in. All right, so I'm not getting any information just yet coming in on the wire, but this is a little bit of a problem. It's trading beyond this point of control. 5,000 contracts. That's a lot of contracts on the NASDAQ. Here we go. So nothing really happening. There's nothing really yet. They're in line with estimates. That's fine. We're cool with that. Okay, but the beef of it all comes when Powell gives us that hawkish or dovish tone. All right. You really want the market to correct. Inflation has moved up. Here we go. Inflation has moved up since earlier in the year and remains somewhat elevated. Yeah, we know that. Okay. We know that story. It's nothing different. Nothing different. Is the press conference on? Surely not. No. The FOMC has not started yet. No chance. Comes in 30 minutes after. Yeah, 6:30. Bloody hell, that got me concerned. Jesus. That scared the life out of me, ladies and gentlemen. My God. NASDAQ's pulling back. What's going on? What are they saying? Come on. They're not really giving us any information just yet. Hold on a second. Let me just go to the news over here. NASDAQ is pulling back sharply. Fed looks to set and end its massive market intervention. Can do it. The Federal Reserve is poised to end its latest program of quantitative tightening. Good. Bringing the curtain down on the massive intervention in financial markets it launched in March 2020. Hopes the markets can stand on their own. Here we go. We got some more information. Uncertainty about economy. Yeah, this is nothing we don't already know. Fed vote. Here we go. Says here that the Fed votes in favor of a policy was 10-2, with Fed Governor Mirren preferring a 0.5 percentage point cut. Kansas City Fed President Schmid preferring no cut. What on earth is that? No cut. Can you believe that? They are talking about it. The Fed signals it will halt QT as it cuts rate by a 0.25 point. That's fine. Why is the market not really? Well, look, to be honest with you, the market really has already priced this story in. Okay. But now we're getting a bit of an insight that Schmid preferring no cut could imply that we might actually get a hawkish FOMC. Fed to conclude aggregate balance sheet drawdown on December the 1st. Okay, that's fine. December 1st, we will roll over all maturing Treasury principal payments. Wait there. What is going on? Where's the bond market? Bonds are taking a shock to the downside. Dollar dominance, is that coming back up? They're seeking safety in dollar now. Don't do that. That's bad news. We don't want the safety in the dollar. Yields shooting up. Bam. Not good. That's not good. You don't want the yields shooting up, man. You really do not want the yields. Dollar is moving up pretty quick. NASDAQ still trailing the lows. It looks like it could roll, ladies and gentlemen. That is no good for us. Where's the volatility index? Where are you at? Volatility index has spiked lower. There's liquidity going into the VIX. This isn't good, man. This is not good. Come on. Please tell me they're going to do a snap reversal. Bitcoin coming down. Where's the book? Where is the book? Where's the book? Come on. NASDAQ trading towards value area low. That's a problem. The lowest point in the day. Come on. They really need to sustain themselves. 26 on the bid side right there. There's a player down there who wants to get swept. Come on. I don't think they like this. I do not think they like this. I don't think they like what's going on. Fed, beginning the 1st of December, we will reinvest all mortgage-backed securities principal payments into Treasury bills. Why are you reinvesting it? No. The last time or any time a government or a Fed reinvests into Treasury bills, okay, it's to get the yields down, to encourage investors. That's no good. I don't really want them to reinvest into the Treasury bills because that's going to make investors say, well, why are you repurchasing your Treasury bills for? Let us do it. But it's clear as day that they don't want it because look at the reverse repo. No one's going into the US government savings account for Wall Street. They're not interested. This is going to be an interesting FOMC. For once, I think this is going to be an interesting FOMC, if I'm quite frank with you. Tino, the king of FUD. I'm reading what it's saying, man. What's wrong with you? King of FUD. Yeah, it's all-time highs and Bitcoin spending a little while at its around its all-time high. You're talking about FUD. Stop. Anyways, I'm joking. I'm joking. All right, then. We got 25 minutes, ladies and gentlemen. I'm just waiting to see if there's any more information on the wire right here. We're not really getting anything. Is this history repeating what happened last time? Well, last time we were speculating on the interest rates. Now we got the interest rate cuts. Now we want to know how much more. That's what we're waiting on. But what I'm looking at here on the bid and the offers, there are more bids coming in And the offers are being met with, see how it goes up and down, right? And it pushes lower, tries to go up, but then comes back down again. It's starting to show me bid side dominance, which can imply that it could continue to go lower. And if it does, then we're going to have a very interesting evening. XRP, certainly amazing. A little while, man. It takes a while, but that's all down to each person itself. Overlay the silver chart with Bitcoin. Yeah, we'll do all of that shortly. This is not a really good sign, and I agree. This makes very interesting to see what JP has to say now. Yeah, Para, it is a very interesting story that they're going to reinvest back into the treasury bills. Don't want them to reinvest in treasury bills. We want domestic and commercial players to get involved in the treasuries. That's why the yields are moving up and the bonds are down, because no one's going into them. And if the dollar dominance is going up, even though your yield on dollar is going down, it's not making sense, is it? Shouldn't be doing that. So it might be just a reaction to the news. Guys are transitioning, moving from other assets. So there you go. Tino, my wife is fantasizing over your boldness, bruv. That is wild. Okay, how do you feel about Bitcoin on the Asian range? Well, Bitcoin on the Asian range, as you can see here, this is the Asian range for Monday. And the idea is that if they're trading away from this logic earlier on in the week, then you are effectively trading away from that point throughout the rest of the week. So if Bitcoin can't sustain this 111 region, then we're going to be expecting Bitcoin to continuously trade away from it for the rest of the week. Okay, so there's nothing else coming out in terms of data right now. So no one's really saying anything. So let's just get with the program, ladies and gentlemen, and break down what we can expect. So we've got 10 past 6 right now. And this is NASDAQ, and it's behaving horribly. You can see it's just absolute madness. Okay. Now, what we're looking at here is Bitcoin's made a nice little move higher. It's pulling back. I just want to go look at the offers and the bids and the orders. So here we go. We've had 184 Bitcoin transferred to a Binance wallet, from Binance to a Binance wallet. Then we've had another transfer of 85 million from an unknown wallet to Coinbase institutional wallet. Okay. Then we got 44 million transferred from Coinbase wallet to an unknown. And then 24 million transferred from a unknown wallet to Bybit wallet. And then 571 Bitcoin transferred from an unknown wallet to an unknown wallet. Okay, so you're going to see that all the time. But what you've got to pay attention to is this, ladies and gentlemen. This is the order flow. There's not that much happening in Bitcoin's order flow, which is expected because it's FOMC, which is why tonight I expect it to do some good things. Okay, up or down. Remember, I trade movement. I don't care about the bias of whether we should believe that Bitcoin should be up or down. It's irrelevant. When you're trying to make money off the asset, it doesn't matter if it's up or down. If you want to stick with the idea of what Bitcoin should have been, well, you should have all stood outside SEC and followed them, and you should have been kissing Gary Gensler's backside and said, please, Gary, don't let them bring the ETF because you're going to sweep it all up and then control it. But you got Wall Street and Bitcoin, and it's done. But all we can do now is just hope that they keep on buying as much of it as possible, all right? And profit from when it makes a nice move for you, okay? Now, order flow, not really that great, okay? Now, let me just draw your attention to this. It's something that I look at. So this is effectively the Fund Pro on CoinAnk. It just tells you what's the liquidity doing, okay? 5-minute time frames just changed to 38.6 million. So we've got a little bit of flavor coming in. But over the last 15 minutes, it's lost 204 million. Last hour, it's up-ish about 26 million. Down on the 4-hour candle by minus 1.1 billion, okay? And overall in the day, it's negative minus 2.1 billion, okay? So we've seen a little bit of pressure offloading in Bitcoin, and that does collate all the leverage and what have you in total. So you can appreciate that we're seeing a little bit of drawdown in Bitcoin today. And you can see that as we're going through each session, okay, or not session, but each candle, it's giving you a negative reading, okay? So you've got to be very careful with what's going on in terms of the order flow. But saying that, we're not getting that much. You know, when I share this chart, it's always looking pink and green. We zoom out, it's not there. So whatever Bitcoin does, look, the best way for you to read this chart is when you see high concentrations of orders, whether it's pink ones for offers to see prices go up or green ones for bids to see prices go down. Look at that, man. That's near enough the biggest order right there. We can see it's 500,000. It's dead. We want 35 million, 40 million, all that. You got 2 million down there. I mean, if we look at the large order flow book itself, large limit order, you can see that it is, look, 1 million, 3 million at 110, 4 million at 100, and 4 million at 110, 600. I'm not really seeing anything significant. Yeah, 11 million. Hold on a second. 11 million at 110,000 on the nose. NASDAQ's going down. The bids are controlling. Look at this. The bids are really controlling the book. They are. Look, see that 33 again? Yeah, it's going down. We're going lower. We are going to try and see if we can sweep lower again. That is crazy, NASDAQ. It was obviously going to happen, but I just didn't expect them to do that. I did a little bit, but never mind. Okay, then, cool. So that's where we are with that one. All right. Need more screens? No. Okay. Read the news, Tino. QT ends December 1st. Yes, I understand that, but if it ends in December, okay, cool. Why has everything gone up? Would you not think it was going to end? Everything goes up from the 1st of December. No, they're pricing it in now. Okay, it's been priced in. Consecutive records being made in the stock market, man. They have priced absolutely everything in. It's going to be interesting to hear what Powell has to say. What does this mean for gold? All right, look, gold itself currently right now, gold. Gold's making a little bit of a snap reversal. It's getting very tricky. Look, my honest opinion is you have to wait tonight. Wait till Asia. We don't know what Powell's going to say. Right now, we're just spitballing and like, oh, look, this is happening. Oh, no, what would that do? We have no idea the tone that Powell is coming with. Once we've established the tone, that's going to give us direction on what we can expect. If gold's going down, there's one of two reasons. Gold's going down because they're bidding for it, because they want to buy it up so that they can offer out later on the expectation of the rate cut, right? However, if Powell comes in and says that we're kind of second guessing the idea of another rate cut because we don't know where we are with inflation, we don't know where we are with the labor market. Yeah, it's contracting, but it's not contracting to a point where we need to be really worried. Okay, US government shutdowns eating into the GDP right now, but it's only cost about $8-9 billion in loss of compensation. Don't need to worry too much about that, given that the GDP expanded 5 points, okay, higher than what it expected from 3.3 to 3.8. So we don't need to worry about that, okay? But what we've got to look at is if gold's going down because they think that the future of interest rates could be higher for longer, then it will slump. But if it's coming down now until Powell then says, yeah, we are going to cut, gold will shoot back up. We just need Powell's confirmation. That's what we're looking for. NASDAQ, what are you doing? I mean, come on, man. It was going to be the case, but never mind. You're telling me of a rally before the news wasn't sustainable. Well, it's not sustainable, man. Who's buying at these levels? Just ask that question. No live trades for me. Not now. No chance. I mean, if you want to see me just do something stupid, then yeah, I'll do it. But I'm not going to do anything stupid. But what is there to trade here? I can't really trade this. This Powell speaking in 15 minutes. I mean, you can go. Wow. I was on 15 lots then. I'm going to go for 5 lots. It might cost me a little bit of cash, but who cares? All right, here we go. Let's just get this up and let's have a look. Tino. You know what? I really need to see if I can do it. Are we going to do it? Go for the bids. Wait. We are trading at value area low. Got to be very careful with this. Wait for it to go back up first. Come on, you're going to do it. I've got to wait. I'm favoring shorts. But I've got to wait for them to come up a little bit. No. I don't want to. This is going outside my yeah, you see that there? That right there is horrible. That right there tells me that the book is getting spoofed left, right, and center. 41 at the top. And then there's a little gap. You see those little gaps here in the book. That is not good to just look at the bids. Can you see little gaps? Yeah, you want me to trade that? You want me to lose money? How dare you? I'm joking. Anyways, so that is pretty much the logic that we're dealing with right now. I ain't scared. Listen, I don't want to trade and make $30. I want to trade and make 5-6 grand. All right. This is not the environment to do it yet. No chance. No way. And with NASDAQ moving so fast in the book, got to be very careful, guys. No, I'm not doing it. Don't worry. Why do it? Why do that? Okay, then. Cool. Now, You know, a guy's book sales must be doing well now. Most definitely. It was an advertising stunt. It really was. Right, we've got 10 more minutes until the Mr. Clean. Stop it, man. Stop it. No, I'm not Mr. Clean. Long XRP right now. Can you get rid of this guy? Please get rid of that guy. Can you not swear in the lives, please? Anybody new? Mad love and respect for passing through. This live ain't even started just yet. We've got Pal speaking very shortly. But if you are new, welcome. My name's Tino. We talk about crypto. We talk about stock market. We talk about macroeconomic data. When I talk about XRP, I get very cheesed off talking about it because it's been the bane of my life. Watching an asset that is meant to go up in value go sideways. Okay? So when someone says to me, go long on XRP, I just want to smash this camera and smash the guy in the face who said that. I take that back. I don't take it back. But I'm saying, look, just anyway. Okay. This live seems like it's going to be a fun live. This live is going to be a fun live. I find that if I find the proof that it is actually you who is obsessed with licks for... Shut up, man. Stop it. Tino, marry my daughter, please. Okay. ASML stock thoughts. Yeah, my thoughts on ASML are that should always see ASML holdings as a bond. See it as a bond. You've always got to have it in your portfolio, especially with what's going on with AI. Profitability margins on AI are high. This is why this rush for energy is a big thing. Because if it costs them too much to run these data centers, it's just going to be eating up at their profits in the end. And it's going to get to a point where it's not sustainable anymore. Okay? Yeah, forget your XRP army. It's not an army. Stupid. Anyways. What do you expect Bitcoin could do by the end of the year? Me, frankly, I expect a sweep of the all-time high and then come back down to sit at Mr. 100K. But that's all going to be based on NVIDIA's earnings. Simple. How many times Powell's going to cough? Not interested in what he's going to do. I don't care. Look at Bitcoin on a monthly. Bearish with that wick. Look, we've got... listen, you're seeing craziness occurring right now in the market because we've got earnings coming out. Microsoft and Google and Meta. So this behavior, it's not environments to be traded. I know we have a little bit of a laugh and a joke and a play around, but you've got to take the game very seriously. You know, these are not times to trade. All right. Because the market gives you a reason to believe something's happening. And then like I wanted to play a short a minute ago, but I hesitated because I could see something happening in the bids and the offers. And now look what's happened. It's gone back up. So though that preservation of capital and that mindset, it saves you all the time. It saves you all the time. Tina, you mentioned you consider selling your stocks. Can you please elaborate on that? How deep of a correction would you consider not to be surprised with? I am waiting for the Santa rally. That's what I'm waiting for. Because historically, companies need to really spend a bit of cash. Otherwise, they're going to get taxed on it. So as we get towards the end of the year, we're going to be hearing about companies getting this and spending here, buying this. They really need to get the cash sorted. Otherwise, they're going to end up paying tax. Okay. Once we get towards that point and spent all that money, then we're going to see a correction. New year starts. Bang. Everything goes back up again. That's what I'm really looking for this Christmas. Okay. So I can get rid of the stocks. Most of my stocks are in quantum, robotics. I play a lot of Japanese ETFs provided by JP Morgan. Okay. I'm going to be giving that list to the members in the platinum members because I'm going to be talking about that this weekend and giving them the list of the stocks that I currently hold. But I'm going to do a deep dive behind each of those stocks. It's a list of about 25, 30 stocks nearly. And I'm just going to be breaking it down for those guys. So if any of you are new, NASDAQ, stop it. If any of you are new and you are new to this hybrid system that we've got going off here, please check out the Traders Reality website. I'm doing this now because we've got the FOMC coming up very shortly. So what we're looking at here is the front page. I don't have hair on this one, okay? But start here, guys. This is where everything is to get you started on the hybrid system. Scroll down, join the Discord. It's free. And then this is where you install the indicators, a little video on how to do that, okay? And then, of course, if you want trade setups, then that's when you start checking out the join section where you become a platinum member, where I give my projections every single day, 5 days a week. It's actually 7 days a week, all the way through Monday through to Sunday. I do projections. We had a good weekend this week and we caught the rally to the upside on Bitcoin. So if you want that flavor, go check out the join tab. It's pinned to the top of the chat and you'll be able to dive into that more about the hybrid system. But please, if you are completely new, I recommend you go and take the free course first. Just give me 1 hour and 10 minutes of your time and do this free course here. Okay? Start learning. 1 hour and 10 minutes. It's going to teach you everything you need to know about the hybrid. This is when I had hair. Look at this virgin. Ha! Look at that guy. Baby face. Anyways, all the concepts on the hybrid are here. Psychological levels, average daily range, moving averages, vectors, patterns, market makers, everything. There's even a glossary in this PDFs in there. Please do this before you consider even joining the memberships. Because if you don't have this, you're going to be in the Discord with the guys. And those guys in there, they're traders, man. They're picking off levels, scalping galore. It's a community, okay? But please do this free course. Get that done first so you understand what you're dealing with, and then go to the homepage and then download the system indicators, okay? Cool. Tuesday's gone. That's a good song. Tuesday's about a horse. But you didn't know that one. Tuesday's gone. What are your thoughts on Solana, Litecoin, HBAR, ETF that launched this week? Whenever a new ETF is launched, okay, you have to wait a couple of weeks. Told you to do that with the ETF of Bitcoin. Came back down, didn't it? Then I said it's going to go to about $65. Now it's at 63 with a high of 65.98. Sorry, I lied. A high of 71.80. So yeah, said to you guys, wait 2 weeks. Any ETF, wait for it. Okay, cool. 5 minutes till JP. That is very true. That is very true. Where do you trade? Look, there are many places that I can trade. I trade on the depth of market. You can, if you don't have the depth of market or you don't have access to certain platforms, go over to BTCC where you can trade the NASDAQ. I strongly recommend you pay attention to the Japanese index. It's above 50 and that is big news, okay? And it's very volatile. If you trade this, you are trading NASDAQ movements in the morning of New York, but in the evening for Japan. That's that index right there. JPN 225. Obviously, you can trade NASDAQ and you can trade stocks. You can trade gold. You can trade Forex. That's all through BTCC. That's effectively tokenized stocks. Okay. So go check that out. That's also, and crypto as well. I call it a good hedging platform because if Bitcoin's not doing anything, you can go to NASDAQ and rip it apart. Okay. So yeah, that's in the description. You can download that link and check it out. All right. And you don't need no KYC or VPN, especially if you're in the United States. Okay. Cool. Where we at? 5 more minutes, ladies and gentlemen. What's your thoughts about silver? And you can trade silver on here as well. My thoughts on silver are simple, ladies and gentlemen. Interest rates cuts, they go up. Great rejection from here. Great rejection. Great. I still expect silver to continue higher. I've got a price target of around $75. That's what I'm looking for with silver. Okay. And the last projection I gave was silver at $19. And I said it's going to go to 50. It's hit 50 and just went crazy. And now my next projection is $75 in silver because we didn't have the same AI as we did before. Now it's going into a different story. Serenade us with your angelic voice, Tino. No. Please don't tempt me. Gold. Nice little flavor play there. NASDAQ still coming down. This is treacherous, guys. Be very careful. Here we go. Here we go, ladies and gentlemen. Right. We're getting close towards it. 4 minutes in. Okay. I'm just going to get everything set up, ladies and gentlemen. Let's get this party started. Going to get my live stream sorted. Oh, my days. This is going to be interesting. No. Don't do that. All right, then, gang. Here we go. Let's get this story sorted out. Here we go. That's how it should look. Let's get Bitcoin back up, see how it reacts. To be honest with you, Bitcoin doesn't really move that much during the FOMC, but we're going to have a look at that on the hour time frame. Pay attention to Bitcoin. That is the price of Bitcoin right there. Oh, my days. This is going to be so interesting, man. This is going to be interesting. Hopefully, I don't have to move this chart up for NASDAQ because that means it's going down. Ha! Here, I'm not trying to spam, but thoughts on what happens when the US government doesn't grant consumers food stamps in November? Forget the riots and stealing. What does that do to companies' financials? Let me put it into perspective, right? When there are layoffs, companies benefit. That should put it into perspective. Amazon's getting rid of how many people? The balance sheet for the duty of investors and shareholders, it's only going to go up because they haven't got to pay 600,000 people, do they? That's going to be the case. They probably won't televise it, but anyway, never mind. Never mind. Okay, here we go. This is where it begins, ladies and gentlemen. Oh my God. I'm looking forward to this. Sort that out. That's your Bitcoin price. Happy days. I don't know, man. I feel on edge about this. I actually feel on edge about NASDAQ and about Bitcoin. I really do. Something stinks. Kraken Robot. I know about Kraken Robotics. Listen, there is a lot of companies that I've been diving into with regards to robotics. I'm telling you now. Did anyone see that robot that did the run up on the wall? Did the backflip off the wall? That's it. Invest in robots, ladies and gentlemen. Because if that thing can flip off a wall, here we go. What on earth is that? Did you see that? What was that? What was that? Tino, how will what JP say affect repo and liquidity? Massively. There's two ways, right? He's either going to be hawkish or dovish. If he's dovish, that means we're going to get interest rate cuts. And that's great news. That's what we want. Okay? That means we're on the path of easing. But if he turns around and says, okay, we're giving you your rate cut, but we don't know where we are with inflation. We don't know where we are with the labor market. We don't know what the story is overall economically because we know that things could get a little bit elevated because of trade tensions or tariffs and everything like that, which is now leading us to believe, even though Mirren, one of the Fed guys, was like 50 basis point cuts because he's down with the Trump. What is that? Yeah, he's down with the Trump. But you've got Schmidt saying no cut. It kind of tell you where we are. Here we go. Forget that. Can't tell you where we are with everything. Here we go. Let's get with the program, ladies and gentlemen. Have yourselves a wonderful FOMC. The boy is about to speak. Come on, give me some sound. Good evening, ladies and gentlemen.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people.
He must be bored saying that, man.
Although some important federal government data have been delayed due to the shutdown, the public and private sector data that have remained available suggests that the outlook for employment and inflation has not changed much since our meeting in September. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals and in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by 1/4 percentage point. We also decided to conclude the reduction of our aggregate securities holdings as of December 1. I will have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a moderate pace. GDP rose at a 1.6% pace in the first half of the year, down from 2.4% last year. Data available prior to the shutdown show that growth in economic activity may be on a somewhat firmer trajectory than expected, primarily reflecting stronger consumer spending. Business investment in equipment and intangibles has continued to expand, while activity in the housing sector remains weak. The shutdown of the federal government will weigh on economic activity while it persists, but these effects should reverse after the shutdown ends. In the labor market, the unemployment rate remained relatively low through August. Job gains have slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Although official employment data for September are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index suggest that total PCE prices rose 2.8% over the 12 months ending in September, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8% as well. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or two or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 3.75% to 4%. Higher tariffs are pushing up prices in some categories of goods, resulting in higher overall inflation. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside. A challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. With downside risks to employment having increased in recent months, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments.
I knew it.
We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook,
I knew
and
it.
the balance of risks.
No
We
risk
continue to
free.
face two-sided risks.
They didn't like that, did they?
In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it. Policy is not on a preset course. At today's meeting, the committee also decided to conclude the reduction of our aggregate securities holdings as of December 1.
Here we go.
Our long-stated plan has been to stop balance sheet runoff when reserves are somewhat above the level we judge consistent with ample reserve conditions. Signs have clearly emerged that we have reached that standard.
Ample reserve conditions.
In money markets, repo rates have moved up relative to our administered rates, and we have seen more notable pressures on selected dates, along with more use of our standing repo facility.
How was that?
In addition, the effective federal funds rate has begun to move up relative to the rate of interest on reserve balances. These developments are what we expected to see as the size of our balance sheet declined and warrant today's decision to cease runoff.
Wow.
Over the 3.5 years that we've been shrinking our balance sheet, our securities holdings have declined by $2.2 trillion. As a share of nominal GDP, our balance sheet has fallen from 35% to about 21%.
What was
In
that?
December, we'll enter the next phase of our normalization plans by holding the size of our balance sheet steady for a time, while reserve balances continue to move gradually lower as other non-reserve liabilities, such as currency, keep growing. We will continue to allow agency securities to run off our balance sheet, and will reinvest the proceeds from those securities in Treasury bills, furthering progress toward a portfolio consisting primarily of Treasury securities. This reinvestment strategy will also help move the weighted average maturity of our portfolio closer to that of the outstanding stock of Treasury securities.
He doesn't realize what he's done.
Thus furthering the normalization of the composition of our balance sheet.
He doesn't realize what he's done.
The Fed has been assigned 2 goals for monetary policy.
Here we go.
Maximum employment and stable prices. We remain committed to supporting our maximum employment, bringing our inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored.
Said it, man.
Our
December cut
success
is
in
not for
delivering
sure.
on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to.
No, you do not look forward to no questions, bro. You just skanked everyone. December cut doesn't look like it could be happening. I like this guy.
Are you comfortable with how market pricing has assumed a rate cut is a foregone conclusion? At your
Dixie,
next
huh? Don't sleep on the dollar.
As I just mentioned, a further reduction in the policy rate at the December meeting is not a foregone conclusion, as I've just said. So I would say that needs to be taken on board. We had, I would just say this, 19 participants on the committee. Everyone works very hard at this and takes their obligations to serve the American people very seriously.
Come on, say it.
And at a time when we have tension between our 2 goals, we have, strong views across the committee. And as I mentioned, there were strongly differing views today. And the takeaway from that is that we haven't made a decision about December. And, we're going to be looking at the data that we have, how that affects the outlook and the balance of risks. And I'll just say that.
You and some of your colleagues have framed last month, and maybe today, I won't put words in your mouth, there's a risk management exercise. At what point do you conclude that you've taken out enough insurance? Are you looking for some kind of improvement in the outlook? Or could this unfold along the lines of last year, where you made a sequence of adjustments and then waited to gather more information?
Give him a sweet
So
one.
the way I've been thinking about it is the risks to the 2 goals. For a very long time, the risk was clearly of higher inflation. And then that has changed now. And as we saw particularly after the July meeting, we saw the downward revisions in job creation, we saw a very different picture of the labor market, and suggested that there were higher downside risks to the labor market than we had thought. And that suggested that policy, which we had been holding at a I would say modestly, others people would say moderately restrictive level, needed to move more in the direction over time of neutral. If the 2 goals are sort of equally at risk, then you ought to be at neutral, because one of them's calling for you to hike and one of them's calling for you to cut. So if that got back into balance, then you'd want to be roughly at neutral. So in that sense, it was a risk management. And I would say the same about today, sort of the same logic. But as I mentioned, going forward is a different thing.
They're not liking
Claire
this.
Jones, Financial Times. Thank you for taking this question. We've just heard from you that the discussion in December and the conclusion of the discussion is not a foregone conclusion. I'd like to just dig into that a little bit more about
Thank you.
What sort of arguments were brought up. Was there any consideration, for instance, of the investment we're seeing in AI and some of the generation of household wealth through rises in stock prices related to the AI boom? Thank you.
I wouldn't say that's a factor in everyone's assessment of the economy. I wouldn't say it's the driving factor. I don't think for anybody. I guess I would say it this way. Once again, I would just point out that we have the situation where the risks are to the upside for inflation and to the downside for employment. We have one tool. It can't do both of those. You can't address both of those at once. You've got a very different situation. So you have some people have different forecasts, right? So they'll forecast faster or slower progress on one or the other. And they also have different levels of risk aversion. And, some will be more averse to inflation overruns, and some will be more averse to underruns of employment. And so you put that together, And as you can see from the SEP and from the public discussion that goes on between the meetings when more participants go out and talk, they're very disparate views. And they were reflected in strongly differing views in today's meeting, as I pointed out in my remarks. And that's what leads me to say that, that we haven't made a decision about December. I always say that. It's a fact that we don't make decisions in advance. But I'm saying something in addition here, is that it's not to be seen as a foregone conclusion. In fact, far from it.
Can I just ask a quick follow-up on QT? How much of the fund impressions we've seen in money markets are related to the U.S. Treasury
This is
issuing
important.
more short-term debt?
That could be one of the factors, but the reality is we've seen, the things that we've seen, higher repo rates and federal funds rate moving up. These are the very things that we look for. We actually have a framework for looking at, what the place we're trying to reach. What we said
Thank you, John.
for a long time now is that when we feel like we're a bit above what we consider a level that's ample, that we would freeze the size of the balance sheet. Of course, reserves will continue to decline from that point forward as non-reserve liabilities grow. So this happened, some things have been happening for some time now, showing a gradual tightening in money market conditions. Really in the last, call it 3 weeks or so, you've seen more significant tightening, and I think a clear assessment that we're at that place. The other thing is, the balance sheet is shrinking at a very, very slow pace now. We've reduced it by half twice, and so there's not a lot of benefit to be holding on to get the last few dollars because, again, with the balance sheets, the reserves are going to continue to shrink as non-reserves grow. So, there was support on the committee as we thought about it to go ahead with this and announce effective December 1 that we will be, freezing the size of the balance sheet. And the December 1 date gives the markets a little bit of time to adapt.
Colby. Thank you, Colby Smith with the New York Times. So much of the rationale for cutting interest rates, even as inflation moves away from the 2% target, seems to be, that there are these mounting downside risks to the labor market. But if those don't materialize and the labor market either stabilizes around current employment levels or even starts to strengthen somewhat, how would that change your perception of how much interest rates need to fall from here? Would you then be a bit more concerned about underlying inflation and the possibility of second-round effects from tariffs?
Yeah, I mean, in principle, if you were to see data that suggested that the labor market's strengthening or even that it's stabilizing, that would certainly play into our decisions going forward. So, we do have, we get some data. The labor market is a place where we get, for example, we get the state-level data on initial claims, which are sending a sort of a signal of more of the same. We also get job openings. And we'll get lots of survey data. We'll get the Beige Book and things like that. So we'll have a picture of what's going on in the labor market, and the fact that we're not seeing an uptick in claims or a downtick really in openings suggests that you're seeing maybe continued very gradual cooling, but nothing more than that. So that does give you some comfort.
But if this shutdown lasts a while longer and you don't have that data in hand, I'm just wondering how that hinders the committee's ability to assess the state of the labor market and make the right policy decisions, and also how much is that factoring into the debate about December?
Yeah. So we get like I mentioned what we get in the labor area. We get some data in inflation, some data in economic activity. And we'll have a picture of what's going on. We also will have the Beige Book again. I would say we're not going to be able to have the detailed feel of things. But I think if there were a significant or a material change in the economy one way or another, I think we'd pick that up through this. So in terms of how it might affect December, it's really hard to say. December's the meeting's I guess 6 weeks away. We just don't know what we're going to get. If there is a very high level of uncertainty, then that could be an argument in favor of caution about moving. But we'll have to see how it unfolds.
What a guy.
Steve Leisman, CNBC. Mr. Chairman, can you characterize the meeting in terms of, you said strongly differing views. Was this a close call, this cut, or was it a close call maybe the other way because you had dissents on both sides? Thanks.
So I was referring to the discussion about, to the extent it related to December. You saw we had 2 dissents, one for 50 and one for no cut. So, that was a strong, solid vote in favor of this cut. The strongly differing views were really about the future. What does that look like? And I think people are saying, they're noticing stronger economic activity. Forecasters generally, broadly, have raised their economic growth forecasts for this year and next year, in some cases quite materially. In the meantime, we see, a labor market that's kind of, I don't want to say stable, but it's not clearly in motion. It's not clearly declining quickly in any case. It may be just continuing to gradually cool. And again, people have different forecasts and expectations about the economy and different risk tolerances. And so there's you read the SEP, you read the speeches, there are differing views on the committee, and to the point where I said what I said.
And just to follow up on the balance sheet, if you stop it, the runoff now, does that mean you have to go back to actually adding assets sometime next year so that the balance sheet doesn't shrink as a percent of GDP and become a tightening factor?
So you're right. The place we'll be on December 1 is that the size of the balance sheet is frozen. And as mortgage-backed securities mature, we'll reinvest those in Treasury bills, which will foster both a more Treasury balance sheet and also a shorter duration. So that's what, in the meantime, if you freeze the size of the balance sheet, the non-reserve liabilities, currency, for example, they're going to continue to grow organically. And because the size of the balance sheet is frozen, you have further shrinkage in reserves. And reserves is the thing that we're managing that has to be ample. So that'll happen for a time, but not a tremendously long time. We don't know exactly how long. But at a certain point, you'll want to start reserves to start gradually growing to keep up with the size of the banking system and the size of the economy. So we'll be adding reserves at a certain point, and that's the last point. Even then, we didn't make decisions about this today, but we did talk today about the composition of the balance sheet, and there's a desire that the balance sheet be right now it's got a lot more duration than the outstanding universe of Treasury securities, and we want to move to a place where we're closer to that duration. That'll take some time.
It's a lot of
we haven't made a
financial
decision
talk
about the ultimate endpoint, but we all agree that we want to move more in the direction of a balance sheet that more closely reflects the outstanding treasuries, and that means a shorter duration balance sheet. Now, this is something that's going to take a long time and move very, very gradually. I don't think you'll notice it in market conditions, but that's the direction of things.
Janelle.
What a mad thing.
Janelle Marte with Bloomberg. How are officials interpreting the latest CPI report? So some components came in lower than expected, but core inflation was still at 3%. So at this moment, what are you learning about the drivers? And also, do you view that the risks are greater that the Fed makes a mistake on employment or inflation?
So the September CPI report, we didn't get PPI after that, which is important for translation into what we look at, which is PCE inflation. But we can still make a pretty good assessment of what that will be. When we get PPI, there might be some adjustments. But so directionally, it was a little softer than expected, and we always break it down into the 3 components. So basically, you've seen goods prices increasing, and that's really due to tariffs. And that's compared to a longer run trend of very, very mild deflation in goods. So that's moving inflation up. On the other side of that, good news that housing services inflation has been coming down and is expected to continue to come down. So if you remember a couple of years ago, that's the one that we kept expecting it to do that. Now it's been doing that for some time, and we expect to continue that. That leaves the biggest category is services other than housing services. And that's kind of been moving sideways over the last few months, but a significant part of that is non-market services, and we don't take a lot of signal about the tightness of the economy from that. So if you add all that up, a couple things to say. One is that inflation away from tariffs is actually not so far from our 2% goal. We estimate, people have different estimates of what that is, but it might be 5 or 6 tenths, and so that, if it's 2.8, then core PCE, not including tariffs, might be 2.3 or 2.4 in that range, something like that. So that's not so far from your goal. So that we look at that, and the thing about tariff inflation is the base case is that it will come, and it probably will increase further, but it is that it will be a one-time increase. And we've been very focused for all of this year at making sure that that's the case, and thinking carefully about what are the pathways through which it could become something else, troublesome inflation. One of those would be, a really tight labor market. We don't see that. Another could be inflation expectations moving. We don't see that. So I think, we're watching this very carefully. I think it's not the case that we're just assuming that it's going to be a one-time inflation. We understand fully that this is a risk we have to monitor and ultimately manage.
With the stubborn in services inflation, what are some of the things that the Fed could do to address that? And especially when we're seeing potentially labor supply.
When they reduce the balance sheet,
Sorry,
it's quantitative tightening.
The stubborn services inflation that you mentioned.
Service inflation, yeah. Well, again, the part of services inflation that isn't coming down as we would like it to is the non-market part of non-housing services. And overall, that's just something that we expect will come down. The non-market part of it should come down. It largely reflects higher stock prices and financial services that are imputed rather than actually paid is a big part of that. But also just, we think policy is still modestly restrictive in my telling. And so that's the kind of thing that should lead to a gradually cooling economy. That's one of the reasons you see a gradually cooling labor market, is because the Fed policy is modestly restrictive. So that should also help get that. I want to say, though, we're absolutely committed to returning inflation to 2%. If you look at longer-term surveys or market pricing, you will see that's a credible commitment, and there should be no question that that's where we're going.
Chris.
Great, thank you. Chris Rugaber at Associated Press. So there's a big investment boom in AI infrastructure right now, as you know.
Interesting question.
Wondering if the existence of such a boom would indicate that rates are not that restrictive after all, and could further rate cuts at this point perhaps fuel an excess level of investment there or market bubbles?
If he says something stupid, then we got a problem.
So I don't think that you're right. There are a lot of data centers being built and other investments being made around the country and around the world. Big U.S. companies are just investing a lot of resources in thinking about how AI, which will be based on those data centers, run through those data centers, is going to affect their businesses. So it's a big deal. I don't think that the spending that happens to build data centers all over the country is especially interest sensitive. It's based on longer run assessments that this is an area where there's going to be a lot of investment and that's going to drive higher productivity and that sorts of things. I don't know how those investments will work out, but I don't think they're particularly interest sensitive compared to some of the other sectors.
And then just a quick follow-up. You mentioned that you do have data that you're looking at for inflation and growth in the absence of government data. Could you give us a sense? I think we know a lot about the jobs data that's out there. Can you give us a sense of what you're looking at to track inflation in the absence of government data? Thank you.
So it's a lot of things, and it doesn't replace government data, but you know all of these. I'll just mention some of the many names: Price Stats, Adobe, and others. For wage inflation, there's ADP data. On spending, you're going to ask about spending at some point. There are lots of other things that we look at, but it's many different sources, and again, including what we get out of the Beige Book, which will be sort of come out mid-cycle as always. And it doesn't replace the government data, but it gives us a picture. Again, I think if something material were happening, if there were material developments, I think we would pick that up. I don't think we'll be able to have the very granular understanding of the economy while this data is not available.
Interesting.
Howard Schneider with Reuters. Thank you. I just wanted you to elaborate a little bit on what you said a moment ago about the continued shutdown, making it more difficult to make a move in December, and that